Number 9 on my hit parade is regulatory risk. And here, this refers to the fact that the regulators can create rules for what you do and they can change the rules. Like, for example, is it legal for me to sell a box of cereal? Okay. Is it legal for me to operate a clinic that gives blood transfusions or gives you physicals? Well, the truth is, it's all subject to regulation. It would be illegal for you to have a nurse licensed in West Virginia working in a clinic in Virginia.
Hi, I'm Crypto Positive. If you like this video, please leave a comment and subscribe to the channel. It's very important to the channel and gives me motivation to make more videos about crypto for you. And now let's go to the video.
Unless I change, line item on page 147. Now, the problem is there are millions of pages of regulations. So there are millions of pages of regulations. They're changing via every county, city, state, country, and cross domicile, and for every use case all the time. And it's hard to comply with them. It's even harder to know you're complying with them. And even if you thought you were complying with them, it's always possible for one of your disgruntled employees or competitors to arrange for it to look like you're not complying with them. And so this becomes a challenge. Like, for example, I operate a bar, you operate a bar, I don't like you. And so I just arrange for a bunch of underage people to come into your bar and order a drink. And then I call, the Bureau of Alcohol, Tobacco Enforcement, and I have them hang out at your bar, and they notice that you're breaking a rule. Okay. It's like, just like, drug cartels notoriously, when they call and they give hints to law enforcement, they're ratting out their competitor. So actually what you end up in a regulatory environment is one competitor rats out another competitor, and that's part of regulatory risk. And then maybe I just, lean on it a little bit to actually cause you to break the rule. What if I even, plant an employee, in your facility, to cut corners, right? Nobody ever shuts down $1 billion factory for breaking a rule and says, oh, it was this employee that did it, right? The corporation is liable for the behavior of 100,000 employees. Regulations are hard. 10. And that takes me to employee risk, right? You have a lot of employees, right? Employees have foibles. Maybe the employee, shows up to work drunk, or maybe they show up high, and then they say something they shouldn't have said. Okay, I get in an elevator, I'm drunk and I'm high, and I'm your employee. Okay, and now you're liable. So you have examples where it's like the $1 billion Tesla lawsuit, where Tesla's getting sued because of something one of their employees said in an elevator to some other employee. And so you run a company. Actually, when you're a shareholder and the company has 1 million employees, you could say, this is great, I have 1 million employees working for me. But if you thought about it, you realize this is interesting. I have 1 million employees, and I am legally liable, civilly liable, or criminally liable for everything and anything any of them might do at any time. One of your employees in a foreign jurisdiction can break the Foreign Corrupt Practices Act, and then you as a shareholder are civilly liable. You might not be criminally liable, but you're actually going to lose all your money, right, when they get shut down because someone that worked for the company did something inappropriate.
Before we get back to the video, I want to tell you that you can get a free $100 bonus from iTrust Capital by clicking the link in the description right now. Now let's get back to the video.
So, I had employees. So, the employees want to go on a business trip. The company pays for them to rent a car. So they take the car out and they go out, drinking, and then they drive the car into a wall and they wreck the rental car. You're liable. The company is liable, right? It's company rental car. They're company employees. They're on a company business trip. So whatever your employees do, right, in the pursuit of company business, you're almost always civilly liable. You're financially liable when they wreck the car. You're civilly liable if they hit a station wagon with a family in it and the family, suffers, and then they sue you. And you might be somewhat criminally liable if they actually, attempt to influence a foreign official, or they break some kind of bright line that has criminal liability, which bubbles up to the company. So more employees, more risk. If you had a company without employees, that would be better, right? Because if there are no employees, for example, in Bitcoin, since there is no employee of Bitcoin, there's no one to take the company rental car and drive it off a cliff, or take an innocent civilian, in the car and drive it off a cliff. So having no facilities and having, technically, if you own Bitcoin, you don't own any facilities, you don't have any employees, there is no board of directors, right? So and ironically, the technology risk isn't really that much of a risk, because the product of Bitcoin is to serve as global money forever. So if what you wanted to hold was 1/21 millionth of all the economic energy in the human race for the next million years, that idea is not going to change for a million years. I'm still wanting to hold 1/21 millionth of all the energy in the human race for forever. Whereas the idea behind the iPhone changes every year. And the idea behind, it was Coca-Cola, then it was Diet Coke, then it was New Coke, then it's Coke Zero, then it's Coke Cherry Vanilla Coke, then it's, Coke Cream Soda Coke, then it's, whatever, Coke. They keep changing the idea, right? And that's the difference between having a complicated product or service idea and just having a monetary idea. After employees, we've got vendor risk. The classic chart is, Michael Porter had this chart. It's like, well, you've got your customer risk, you've got your competitor risk, you've got your not in kind competitor risk, and you got your vendor risk. And he articulated those four competitive forces. Now, the truth is, the four was the four politically correct forces. There's a lot more forces that are diluting the shareholders than those four, but clearly one of them is vendors. I run a Bitcoin mining rig, and then my electricity provider doubles the cost of electricity. Oops. I run a restaurant, and then my potato, provider doubles the cost of potatoes. I run a steel refinery, and ore doubles in price. I use electricity, or I use oil, and the cost of oil doubled, in my plastic. So generally, when you look at companies, in terms of who's senior in the capital structure, the way you think of it is common stock equity holders are junior. They take the first losses. Then the preferred equity holders are senior to them because they keep their value after the common stock loses all its value. Then the junior creditors that hold junior unsecured debt are kind of senior to the preferred shareholders. And then the sometimes secured creditors or senior creditors are senior to them. And then there are certain asset-backed lenders that they have the ability to claim their assets back in the event of default, and the assets might have some value. So they're a little bit senior. And then you get down to like, more senior in the capital structure would be like landlords. If they have the ability to evict you from your facility, that's good, but really senior to them are the utility vendors. The company that provides you with your telephone service, your electricity. If you're like a Wall Street broker and the phone company can turn off your phone, that's senior to the real estate landlord, and it's definitely senior to all the creditors and all the equity holders, because the phone company can turn your business off in 5 minutes.
Пустой зал, ожидание вокзала. Стою и смотрю куда-то в сторону перрона.